too far to refer to industrial property as the ugly duckling of the property sector compared to office and retail counterparts, but it's certainly seen as being on the less glamorous side of the spectrum. However, as the economy continues to recover strongly, it's attracting a lot of renewed investor interest. Dr. John McCartney, Director of Research with Savills Estate Agencies, has just published a new report on industrial property investment in Ireland and joins us now in studio. You're welcome, John.
Thank you, Vincent. Morning.
It is fair to say that industrial property is probably on the less glamorous side, both in terms, I suppose, philosophically and also where it's located on the edges of cities and everything, but it's attracting a lot of interest now.
Absolutely. And I think what's fundamental to this really is that the purpose of industrial property in commercial activity is changing. In the past, industrial property was very strongly linked to the manufacturing sector, and that is changing in itself. It's now more so the fact that logistics and distribution is driving the demand for industrial property, and that's joined at the hip with the retail sector and with the consumer economy more than with the manufacturing economy. So the whole tenor of that market is gradually changing.
And I presume the continued success by IGA Ireland in bringing new entrants into the Irish market here, sometimes on the manufacturing side, is boosting that as well, is it?
Absolutely, yeah. It's a mixture of both, and that certainly helped. I mean, IDA had another fantastic, successful year last year in attracting new projects and in facilitating expansions and so forth. But it's really this bounce back in the consumer economy that's driving everything. We see that between 2011 and the end of 2013, personal consumption expenditure contracted in 9 out of those 12 quarters. But since then, you know, you can see that it's really rebounding. It grew by 3% year on year in Q4 last year, gone up to 3.8% in Q1. Retail sales up 5.5%, VAT receipts up nearly 8% year on year. So something is really picking up in the consumer economy, and all of the supply chain assets that serve that economy are now seeing the benefit. For example, we saw yesterday commercial vehicle sales up 53% year on year, and with the industrial property market, take-up of industrial space up 128% in the first half. I was just
going to say that more than double the amount of industrial property actually changing hands in the first half compared to last year.
Absolutely, yeah, and 17% more in the first half of this year than in the full year of 2013.
Now, about 2/3 of that changing hands involves sales rather than rent or leasing. Who are the investors in this market now? Who's looking at this market for returns?
Well, it's a mixture of both. On one hand, you have some activity at the very upper end of the market, with the funds and institutions rebalancing their portfolios to include a certain percentage of industrial space. But generally, the bread and butter of this investment is actually owner-occupiers buying their own industrial premises. And the reason that they're doing that really is that the yield is quite high, which signifies, I suppose, that rents in the sector are high relative to prices. So that swings the balance in that supply demand, or that sort of buy or rent decision, towards buying, and that's what a lot of owner-occupiers tend to do when yields are high.
Now, as with office and indeed the residential market, is this primarily a Greater Dublin phenomenon? I mean, a lot of people, towns and cities around the country would say there's a lot of unoccupied space in our industrial estates outside our regional towns and cities.
Well, our report only covers the Dublin market specifically, but I think generally, to the extent that the consumer economy is picking up across the country, the industrial market will benefit from that everywhere, I would say. But certainly in Dublin, we're now getting to the point where the vacancy rate is dropping, and as sure as eggs is eggs, the one thing that leads to is further rental growth. And when that happens, then, you know, you're going to get new building coming on stream. So I think the Dublin market is definitely tight and tightening all the time.
Now, very little new stock in terms of industrial property over the last 10 years, certainly since the crash in 2008. Are we getting to a stage where the returns on industrial property are getting to a stage where it will be attractive to build new stock, new buildings soon?
Yeah, I think so. Industrial property is the same as every other type of property. It'll only get built if the capital value exceeds the construction costs. In terms of the capital value, there's two factors that drive that. Rents have gone up by by 6% in the last 12 months. So that's moving in the right direction. At the same time, yields are compressing. In fact, they're compressing more quickly than in any other sector of commercial property. They've fallen by about 320 basis points in the last year. So a combination of increasing rents and a compressing yield is driving capital values up very quickly, and we envisage that by this time next year we will start to see some new development in the industrial area in Dublin, albeit on a sort of a pre-let basis.
Dr. John McCartney of Savills, thanks indeed for joining us. Coming up, should we be worried that the Chinese dragon has reduced the value of its currency by record levels? Stay with us.
Newstalk Breakfast in association with Aircom Business Solutions, delivering the best value for business across landline, broadband and mobile.